in their packets, there's about a 9-page letter that gives an overview of the different financial transactions and activity that we experienced the last fiscal year. And so I would encourage all of you to take some time to read through that, because it gives a summary of all the activity that we did over the past year. When I think about this book, it's 168 pages, and we had to be able to explain information on each page, but it's really summarized in those 9 pages. It's a letter to management about what we have done over the past year. And as Kevin already alluded to, the new market tax credits, that took an awful lot of time. We created different entities that we had to include in our financial statements. We're also now having to do an audit on those entities individually, not just the city audit, but I imagine in a few weeks we'll be coming back to you to present you the audit for C.C. Woodson and for the St. John Street Parking Garage. So our work has increased, as Kevin mentioned, and it has been challenging to not only the accounting staff, but even other staff members who we've had to go to for assistance. So I just encourage you to read through those pages to get more details about the activity this past year. We also had to implement this year GASB 45, so we have to account for other post-employment employee benefits. That was a new accounting pronouncement where they wanted us to account for the benefits that we're promising employees. It's a process that we started a couple of years ago, and as you know, we made changes to our benefit plan. And I know you're aware of all of that, but this is the first year that is actually in our statements. And then, of course, as most of you know, our enterprise funds, we had to make some decisions at the end of the year to cover some prior year losses that were accumulated. And so we had to make that decision. And since the general fund is the primary fund, any fund that comes up short, the general fund has to be responsible to make that shortfall. And so what I'm going to go over is just 2 funds primarily tonight, the general fund and hospitality. And just the highlights here, when you look at the general fund, the total revenues were $33 million, a 4% increase over the previous year. And the majority of the increase came from the residential trash fee. I'm sure all of you got telephone calls about, but in any event, we got telephone calls ourselves. But you can see we generated almost $1 million in additional fees for the trash fee. I also pointed out here we got an additional $400,000 from stormwater. That was what I consider a one-time revenue, because they went back and paid us back for, I believe, 5 years worth of stormwater fees. So that was a one-time revenue that I wanted to point out, because we won't get that again this year. The normal annual fee is about $15,000 to $16,000. So I wanted to point that out. Last year, that was another significant increase. The taxes and licenses, which represent the majority of our revenue, was really flat for last year. When it comes to our expenses, they were up by 5%, and they were just the normal operating costs, because as you all are aware, once our nation and state went through the economic crisis, we began immediately trying to cut back, but still our operating costs were up about 5%. The next slide here just points out in the general fund where our majority of our revenue comes from. Taxes represent 39%, and licenses represent 38%. And you see the different categories where we get our revenues from. And even another statement with our taxes, due to last year being a year of reassessment, and there were a lot of appeals filed over at the county, the tax collections overall decreased percentage-wise. And so we are hoping that we see an increase this year, because there was so many appeals that our delinquent collections were over almost at $1 million again. So people were paying their property taxes late. And one of the things that we noticed, that even the delinquent tax collections, the number of delinquent properties increased also. And so we try to be very sensitive to what's going on in our community, because when you have more people not paying their taxes on time, it's going to affect what the city gets. You might get it the next year, because if someone doesn't pay, then it goes to the tax sale and you get it the next year. But tax collections were down slightly, but collection percentage was down due to the slowing of the economy. The next slide here is our expenditures, and as you can see, public safety represents about 38% of our expenditures. Next is public works. If you put those two together, that's 60% of our budget goes for public safety and for public works, and the rest is divided up among, policy and administration, parks and rec, 6%, community development, even finance represents 5% of the city's budget, and capital outlay is the other 4%. The next slide here is the general fund balance history, and this, as Kevin alluded to, and next year, fiscal year 2011, they're changing the description of this, but this is our fund balance, the 10-year history. You can see it's been sort of steady, from 2006 to 2008, and for most of the year, we were telling, Ed, he would be asking me from time to time, but then it's how the fund balance looking, and we were projecting an increase. And then as we got to the end of the year, when we were really analyzing the fund balance and looking at all the funds of the city, I think, management made that decision that due to some of the losses that we were experiencing in the enterprise fund, we needed to make that transfer, because if that transaction hadn't been done, there would have been a positive fund balance. That's what I'm trying to say. But at the end of the year, we had to make that decision, even though the liability's always been there on our books, but that's something we have to true up. And so I wanted to also just add the hospitality tax fund, because I know that's been a source of funding for several of the projects that we've had the past several years. So I thought it was important for me to show you, last year at June 30th, we had a fund balance of $2.4 million. And throughout the year, we collected $3.3 million. We had expenses of 1.6, but we had transfers of $2.9 million. Now, a lot of that you're already aware of went for the C.C. Wilson project, for the garage project, and for other capital projects. And so at June 30th of 2009, the balance in the hospitality fund was $1.2 million. And monthly, we report to the manager the collections for hospitality. And they're still lagging behind previous years in terms of growth. But I do believe in James' last quarterly report for the budget, I believe we're projecting that we are going to meet budget this year. But that's just a trend that everyone is seeing all over the United States. We hear news out of Colombia, how sales tax revenues are declining. That's going to also affect our business license and also restaurants, because when people don't have money to go out and to restaurants to eat, then our collections are going to go down. As I close here, the current year issues that we're facing, we're still impacted by what goes on in our nation, in our state, and the upstate. The decisions that we need to make regarding the pension, the stormwater, the transit outright, the facilities, that's going to affect how our fund balance is, the decisions that you as a council make. We have concerns about our medical reimbursement fund. Currently, we have spent almost $245,000 more than we can contribute. I believe that was in James' last budget report. But I know just last week we met with our health fund advisor, and he told us that he thinks that our expenses are not as bad as they look, and we haven't had a lot of high-paying, what would you say, the claims, thank you, James. The claims have begun to slow down somewhat, so we're hoping that by the end of the year that we will not have to have advanced that much, because again, that affects the general fund balance. Because, for example, what if this was June 30th and we had advanced $245,000? That means we have to deduct that from our general fund, and that wasn't budgeted, but those were the actual expenses. And another thing that I told the manager and Chris is aware of, we're somewhat concerned about business licenses and tax collections this year. As most of you know, business licenses are due without penalty by March 1st. As I've told Ed and I've told Chris, I've seen the receipts coming in slower. When I compare, and it's not an exact science, but when I compare